Ladies and gentlemen, welcome back to another shit show sandwich, okay? At least in the beginning of trading today, it was looking rough. It was looking like, oh boy, we gotta start selling kidneys around here, okay? No more vacations, Christmas is canceled. That's what it was looking like. I know a lot of you guys were pretty scared heading into today. Some of you that I have talked to personally were getting to a capitulation kind of emotional state. And even members in the trading community, I had to tell them like reinforce what Warren Buffett says. You know what Warren Buffett says? He says if you bought a house and you liked that house, and then the next day somebody came up to you and asked if you wanted to sell that house for 30% less than what you just bought it for, you would say, are you smoking something? Are you crackhead? Yeah, at least maybe that's just what I would say. Like you're tweaking or something. Okay, that would make no sense. Same thing in stocks. Okay, when you buy a stock, if the price is the only thing that changes, well, as long as you bought the stock at a good price, a reasonable price, or a price in which is at a discount to where you think the valuation is, nothing has changed besides the price. Doesn't mean you want to sell stocks. The only time I sell stocks is when something materially changes. Okay, now I'll tell you a little bit of a story, I guess, if you will. In the trading community, I invested in a stock, ticker symbol NTLA, Intellia Pharmaceuticals, gene editing company. Everything was looking great. We were up over 200% on that stock. Now, some members took profits along the way. We, sold some calls on it. Like we did some things with the position. We were up over 200%. But then one day, news came out recently that there was a liver event and the FDA was putting a hold on the company's drug. That changed the story for the company. Stock fell. We were still up close to 60%, but I decided to sell that company because the story changed. Okay? So when I'm looking out in markets, and over the past month, stocks have just been selling off because of just price action, but nothing changed with the companies, that is a buying opportunity in my opinion until something does change. Okay, now stocks did really bad at the start of the day today. You recovered a bit into the end of the day, especially for small caps, for AI, for mid caps. The Nasdaq didn't recover as much, but the Russell definitely had quite a recovery into the later part of the day today, and we'll go over why that is. But long story short, it's exactly what we've been talking about. It's the government shutdown that has been weighing on this market, weighing on investor sentiment. And, well, it looks like we might have some good news on the government shutdown coming soon. And that is getting Wall Street a little bit more excited. But, ladies and gentlemen, before we get into all of this information, hit that like button as well as subscribe to the channel and check that link out down below in the description of today's episode if you guys want to come join the trading community. Let's go ahead and get started. Okay, so here was one of the big stories today, and again, we were early on this channel to identify this problem, okay? The government shutdown, the economic data, and the uncertainty and fear that is coinciding with that. Okay, we were early to identify that on this channel as a cause for concern for this market, and it really started to shine today. It says here, shutdown means another missed jobs report. Here's what it probably would have shown. So all we have to go off of are the estimates from Wall Street. Okay, the jobs report may have been really good today and alleviated some of the growth concerns or growth scare, recession concerns, but we don't have that data. So Wall Street is reacting to the estimates. And it says here, had the Bureau of Labor Statistics released its monthly non-farm payrolls report, economists surveyed by Dow Jones expect it would have shown a decline of 60,000 jobs and an unemployment rate increase to 4.5%. No wonder small caps and risk-on areas are getting absolutely decimated over the past month. These are the estimates for the jobs report. And, it probably would have been a lot better than that. Like, even if it was a negative number, it may have been like negative 20,000 or pretty close to break even, in my opinion. But that's the estimate we have to go off of. That's like deep recession shit right there. Like, that would not be a good number if we got that. Okay, now, it makes sense why Tesla's not doing very well today. And a lot of the other stocks that we invest in. Now, the main headline on CNBC says consumer sentiment nears lowest level ever as worries build over the shutdown. It says here, worries over the government shutdown surged in the early part of November, pushing consumer sentiment into its lowest in more than 3 years and just off its worst level ever, according to a University of Michigan survey Friday. So if we actually go look at tradingeconomics.com/calendar, or just type in Google trading calendar, and you always want to keep one of these tabs open on your desk, on your computer, on your phone, whatever it is, so you can check and see what the data looks like on any given day. But you can see the headline number came in at 50.3. Last month you were at 53.6, and the estimate was 53.2. So you came in quite a bit lower than estimates. 5-year inflation expectations came down to 3.6% from 3.9%, so that's good. Consumer expectations came in at 49.0, missing estimates of 50.1, and lower than last month when it was at 50.3. Current conditions came in at 52.3 versus last month at 58.6. and expectations of 59.2. So we were actually expecting current conditions were going to get better from October to November. I don't know why that is. Probably a flaw in the survey, to say the least. But yeah, that did not happen. The numbers came in really bad. Michigan inflation expectations for the 1 year ahead period came in at 4.7%, higher than the estimate of 4.6%, and higher than last month's estimate of 4.6% as well. So just across the board, like, that didn't look great. Now, the Michigan Consumer Sentiment Survey is very political. There's only like 200 respondents, so it doesn't mean much. So really, we didn't get any kind of new solid information today. Just, we didn't get information is the problem. We did not get the jobs report. That is a problem. And, some of these other headlines that we're going to look at as well in just a moment sound really bad. Like, there's one I put in the trading community specifically this morning that I was even like, oh my gosh, like, why are they saying this? Now, it was from Hassett today, that is the White House senior advisor. He says the shutdown hit the economy harder than expected. He said Friday that the government shutdown hurt the economy, quote, much worse than expected, and may have caused lasting damage to federal operations. He noted the impact will likely show up in fourth quarter GDP data, but maintained a positive outlook, forecasting up to 4% growth next year. Hassett also criticized the Federal Reserve for cutting rates by only 25 basis points, suggesting the central bank, quote, may have become partisan. President Donald Trump has repeatedly called for deeper rate cuts. So you got that headline today in the morning, and it was like, oh my gosh, like, why are they freaking saying that? Like, we're not getting economic data, and you hear that there could be lasting damage done to the economy. And yeah, you're going to get Wall Street that panics, especially when the expectation was a negative 60,000 jobs report. Like, some panic is going to happen with that shit storm like we had this morning. Now, also in the news today, USDA says it's working to comply with the judge's order to pay the full SNAP benefits. Now, Donald Trump said today that he's not worried about an AI bubble. So, we did and are starting to get quite a bounce into the end of the day. And partially it probably has to do with this comment. Trump's not super concerned about the state of the markets. Like any other time that, Trump didn't like what the markets were doing, he would just, put out a post and, say to buy stocks. Well, he's saying AI is not in a bubble. And even though that doesn't really mean much, it is comforting to Wall Street to hear that. Canada's Prime Minister Carney says that I expect talks with the U.S. on trade will resume at some point. Donald Trump has just said today that inflation is at a perfect number. Trump says he doesn't know how long the shutdown will last. And Trump says it's up to Democrats how long the shutdown will last. Rating says today the U.S.'s fiscal challenges may limit its ability to provide meaningful counter-cyclical support to states and municipalities during a downturn. Basically what that means is if you were to have like another 08 again, or some kind of large, recession, you may not be able to see as many government bailouts as we've seen in prior recessions. Long story short is what that means. Now, Senate Republican leader Thune says there's a possible vote on a bill to pay some federal workers today. This was what really started the market's recovery. Okay, this was the big, I guess, reversal factor of the day today from what I can see. Now, I'm sure there's someone out there, market makers or whatnot, that bought this market into the end of the day that maybe know something. Like maybe we could get news over this weekend, and that's why we rallied aggressively from the lows. But this was the specific headline that turned this market around. Again, you're down a lot in like the last month for most stocks, AI, small caps, you get it, mid caps. But this is what caused the recovery today. American Airlines CEO said today that he warns flight reductions could become problematic as carrier manages a 4% cut, 12,000 passengers affected by Friday's FAA mandated cancellations. Now, also this morning, Senate Majority Leader John Thune plans to put forward a plan to end the shutdown. Now, Senate Democrats to lay out a proposal to end the shutdown, proposing to extend ACA subsidies for 1 year. This is probably when the shutdown ends, okay? Because from a Republican perspective, this is like a Republican political perspective. Not, I'm not going to speak for Republicans out there, but from a politics perspective, you know who's going to be blamed for food stamps not being paid or that people cannot get their flights, okay? It's going to be Trump. It's going to be Republicans. That's who's going to get blamed. People always blame the president or the current administration. That's just how it is, no matter if they're right or wrong. So, from a political perspective, it makes sense for Republicans to cave a little bit, at least to get the situation over with. It's like, they're not going to win politically at this point. The backlash is already going to come and be on Republicans from, most people that don't understand what's going on right now. CNN Fear and Greed Index today hit a low of 17. It's currently sitting at 18. So even after, a little bit of the recovery towards the end of the day, you're still sitting in extreme fear. Like people are retail investors especially are pretty washed out. And a lot of them have got margin called. A lot of them have been forced to sell. A lot of them have long sold positions. And, that's typically when markets start to bottom. When you start to feel like, oh my gosh, this is never going to end. When you're starting to get really scared, like I've heard from a lot of retail investors lately, is when things typically are about to get much better. Okay, that is what you call capitulation. And that has happened. Market momentum is in fear, stock price strength, extreme fear, stock price breadth, extreme fear, put and call options, extreme fear, market volatility is fear, safe haven demand, extreme fear, and junk bond demand in extreme fear. All of these categories are in extreme fear besides market momentum, which is probably pretty close to being in extreme fear, and market volatility, which is probably, again, pretty close to being in extreme fear with the VIX above 20 today. So yeah, like people are pretty nervous. Now, the Fed rate monitor tool is still pricing in a rate cut for December 10th with a probability of 64.4%. The odds are actually rising today as the odds of getting the government shutdown resolved are rising as well. Percent of stocks trading above their 50-day moving average coming in today at 34.72%. That's a really rough number, okay? That's down in the lower kind of area we've been in the last 5 years. Like this is correction type, negative price action. I'll call it. When 34% of stocks are above their 50-day moving average and 65% of stocks are below their 50-day moving average, that is far from a healthy bull market. But, we'll see. So what's really going to move this market is getting the government reopened again. See, when you have an expectation from Wall Street of negative 60,000 jobs, and that's the average estimate. So some estimates were a lot worse than that. And we don't have any economic data to compare the estimates to. Wall Street's just running buck wild with their own fears at this point. The reality of the situation is that today's jobs report was probably not going to be great. It was probably going to be negative, but probably not 60,000 jobs negative. Okay, that is like deep recession shit. That is not a good number at all, no matter which way you want to put it. Well, we just don't have the economic data. So I think once we get the government reopened, which it sounds like could be this weekend, we'll have to see. And obviously the government is pretty stupid at this point. And maybe it doesn't open for a while. But it seems like Wall Street is getting a little bit excited about the prospect of the government reopening. And once we do, we're going to get economic data that I think will show the economy is not as weak as some people think. And that is what really triggers this year-end rally, in my personal opinion. Now, you can also see that on the IWM, okay, this is the Russell 2000, you broke below the 50-day moving average. Once you did that, you broke almost to the 100-day moving average. Now, what's interesting about that is normally when you get these kind of candles where you just kind of flush down really fast, that can be a low indicator. Like right here you had one, right here you had one, right here you had one, you bounce a little bit, and then you ultimately faded again in April. But once you get these big candles that, give you a large wick on the downside as well, it tends to be a bottoming indicator, at least on a short-term basis. So we will see. I actually did make a trade on the Russell 2000. If you guys want to see that specific trade, shorter term trade, kind of gambly, check that link out again down below in the description of today's episode for the trading community. But I think from a commonsensical kind of point, Republicans are going to gain nothing from keeping the government shut down. Nobody's going to blame Democrats, even if they probably should. all of the blame is going to fall on Trump and Republicans. Okay? It makes sense to get the government reopened, especially now since air traffic is and flights in general are starting to be delayed and canceled. Like, that is really not good for politics, and it's not good for politics to watch portfolios go down either. That gives you no brownie points with anyone, you know. So yeah, over this weekend, I wouldn't be shocked to get a some kind of continuing resolution to fund the government, something like that, that gets announced. So let me know your thoughts on all of this down below in the comment section. Hit the like button as well as subscribe to the channel if you have not done so already. Have a great rest of your day, and I will see you in the next one.